Ever feel like the world of finance is just way too complicated, like it's some exclusive club you're not a part of? Well, if that's you, you're in exactly the right place. We're going to cut through all the noise, all the jargon, and show you step by step how to start making your money work for you.
So let me start with a quick story that might just blow your mind. Picture this, it's about 10 years ago, and you've got 1 lakh rupees. Now, you could go out and buy a brand new Royal Enfield motorcycle. Pretty cool, right? Or you could take that same 1 lakh and invest it in Eicher Motors, the company that actually makes Royal Enfield. So what happens? Well, fast forward 10 years. That bike, it's older, it's worth a lot less. But that 1 lakh you invested, that's now worth about 10 lakh rupees. That's a 10-fold increase. How is that even possible? Well, stick with me.
Now look, stories like that are super exciting. I get it. But they also create this myth that investing is all about getting rich quick, Like it's some kind of lottery. And honestly, that's not it at all. The truth is, the real point of investing isn't about hitting some overnight jackpot. It's about something way more important.
So, what is the real reason we should all be investing? Let's get into it. It's not about chasing some hot new stock you heard about. It's about building a future. It's about methodically and patiently reaching your biggest financial goals, whatever they happen to be.
The easiest way to think about it is like this. Investing is like planting a seed. You start with your initial investment, the seed. You water it regularly by adding a little more money, and over time, that seed grows into a huge tree that gives you fruit, your returns, year after year. That's really it. That's the core idea.
So what are your big goals? I'm serious, take a second and think about it. Do you dream about retiring comfortably? Maybe you want to pay for your kids' education without drowning in debt. Or maybe you want to buy your own home or travel the world. Well, investing is the most powerful tool you have to turn those dreams into your reality. But there's a problem. There's this kind of silent thief that's always working against you, quietly eating away at the money you've worked so hard to save. And that thief's name is inflation. So here's how it works. Let's say you have 100 rupees tucked away in a drawer. If inflation is around 5% a year, then next year, that same 100 rupees will only buy you 95 rupees worth of stuff. It's losing its purchasing power. Every day your money is just sitting there, it's actually shrinking in value. That's why you have to put it to work. Okay, so how do we fight back against this inflation thief and grow our money? We use a secret weapon, a force so powerful that it's the key to pretty much all long-term wealth. It's called compounding. Even Albert Einstein was completely in awe of this. He famously called compound interest the 8th wonder of the world. And he was right, because once you really, truly understand how compounding works, you'll never look at your money the same way again.
Let's break down how this magic works. With simple interest, you only ever earn a return on your original investment. But with compounding, something incredible happens. You earn a return, and then the next year, you earn a return on your original money plus the returns you already made. Your profits start making their own profits. It's like a snowball rolling downhill. It just gets bigger and bigger, faster and faster. And this slide shows you the most critical ingredient in the whole recipe, time. Just look at this. The growth isn't a straight line, is it? It's a curve that gets steeper and steeper. The jump from year 10 to year 20 is massive compared to the first 10 years. That's because the real magic of compounding happens in the later years. This is why your single biggest asset as an investor isn't your money, it's your time.
All right, so you get it. Compounding is amazing. But you're probably asking, okay, great, but where do I actually invest my money? Well, the good news is you don't need a PhD in finance. You just need to understand a few basic building blocks. And these building blocks are called asset classes. You can think of each one as having its own personality, right? They each have different levels of risk and different potential for growth. The trick is to combine them in a way that works for you. Let's take a quick look. First up, you have equity, which is basically stocks. You're owning a tiny piece of a company. This has the highest potential for growth, but it's also got the highest risk. It's kind of like the engine of your investments. Then you've got debt, things like bonds or fixed deposits. This is much safer, more stable. Think of it as the anchor. Then you have things you can actually touch, like commodities. Gold is a big one. And of course, real estate. Each one plays a different role. So now you've got the map. You know the different territories. It's time to figure out how you're actually going to start this journey. And that means deciding what kind of investor you want to be. You've really got 2 main paths.
Active investors are the ones who try to beat the market. They're doing tons of research, picking individual stocks, trying to buy low and sell high. It can be really rewarding, but man, it takes a lot of time, skill, and it's risky. On the other hand, you have passive investors. They don't try to beat the market. They just try to be the market by owning a little bit of everything. It's way less dramatic, but it's also way more reliable and a lot less stressful.
So which path is the right one for you, especially if you're just getting your feet wet? Well, honestly, the answer is pretty straightforward.
For pretty much anyone just starting out, passive investing is the smarter, more reliable way to go. This isn't just an opinion. It's a strategy that's been proven time and time again, and it's even recommended by legendary investors like Warren Buffett. It's simple, it's effective, and it's the best path for building wealth over the long run.
Okay, so how do you actually do this whole passive investing thing? Well, the easiest and most popular way is with a mutual fund. Just think of a mutual fund as a big basket that holds hundreds or even thousands of different stocks or bonds. A professional manages the whole thing for you. So when you put a little money into one mutual fund, you are instantly diversified across all those assets. It's the simplest way to build a strong portfolio with just a single investment.
And that's it. You now have the basic toolkit. You know why you should invest, to build the future you want. You know how it all works, through the magic of compounding, and you know where to start with a simple passive approach. The only thing left is to take that first step. So, let me ask you, what future goal are you going to start investing for?